Tata Consumer is the top Nifty gainer. Among the top Nifty gainers on reports of the company looking to buy the iconic brand Bisleri. The management of Bisleri tells CNBC-TV18, even as multiple suitors have lined up, talks are underway with the Tata Group as they prefer the culture.
Fino Payments Bank surges in trade. This comes a day after Capri Global Holdings buys 13 lakh shares of the company in a large trade.
Sugar stocks surge after the Sugar Mills Association, ISMA, says that sugar export limit may be raised by 2 to 4 million tons.
And it's a subdued listing for Keystone Realtors. The stock, though, recovers from the day's low. It debuts at a premium at around 2.5% in comparison to its IPO price.
Hello and welcome. You're watching us here on Chartbusters. Looking good for the markets. In fact, opened around that 18,350 mark, and from there it's continued to gain. So it hasn't sold off at the open this time around. It'll be interesting to see whether we sustain here or not, because we have seen a fair amount of calls being written between that 18,350 to 18,400 mark. If we maintain our levels here, then perhaps we may see some more short covering. It is November series expiry. Nigel, what do you make of the market so far? It's the mid-cap index which is underperforming.
Well, that's right. The mid-cap index is underperforming yet again, and that's why, you have a sense that the Nifty is more like 17,500 rather than 18,300 because of the underperformance that we've seen. Just pull up a month-to-day chart. If you pull up the Nifty and if you pull up the mid-cap index, the small-cap index, in fact, on days that the Nifty is ending high with a gain of around 100 points, well, still the small-cap index doesn't participate. So that's a little bit of a worry, but let's hope that we're on the verge of that swinging around. Let's focus on a couple of stocks. PB Fintech, that's buzzing in trade after the regulator, IRDAI, has revised the consultation paper on expenses of management. Surabhi is with us to run us through all of those details and a quick analysis. Surabhi?
PB Fintech is buzzing in today's trading sessions with huge volumes. This is because 1.6% equity changed hands earlier today. More importantly, IRDAI has released a revised consultation paper on expense of management and commissions. According to this, the regulator has done away with the specific cap on the commissions to agents and intermediaries that it had earlier proposed in August. Instead, it has suggested that the commissions paid by the insurance companies, both life and non-life, should not exceed the expense of management. Proposed expense of management limit is 30% of gross premiums for life insurance companies and 35% of gross premiums for standalone health insurance companies. This may come into force in April 2023. This is a big positive for PB Fintech as it substantially reduces the regulatory risk for commission rates.
Interesting. Thanks so much for that, Surabhi. Clearly, the stock has got wings because of that. It currently has moved to the high point of the day as we speak. The Nifty, by the way, that's running away. Now, we're trading above that 18,350 odd. You'd like it to trade above these levels because it's expiry today. And as we mentioned earlier, the 18,300, 18,350 call between them, close to around 2 crore shares odd, is what the open interest was at the start of today. But let's focus on another company. The JK Paper, well, they have completed the acquisitions of 2 entities. That's Horizon Packs, which is the larger entity, and Security Packs Packaging. That's what's going to be interesting because these 2 companies, in fact, the focus more is on corrugated paper packaging. To understand more about this, well, we're joined by Mr. Mehta, the President and Director at the company who's joining in. Hi, Mr. Mehta. Thanks so much for finally speaking to us. We were trying to reach you yesterday as well, but good to have you on the show. Let's focus on this acquisition, and let's focus on the larger one. Horizon sales have moved from around 487 to around 741. I want to know what kind of utilization levels is it functioning at to get the 750 crores odd? At peak levels, what kind of revenues can you do? And also give us a sense on the margins of this acquired assets. I'm guessing it's lower than what JK Paper does, but give us clarity on that.
Thank you, Nigel. So in fact, we were studying the attractiveness in the paper and the light sector, and we found that the corrugated, the packaging, this sector is highly growth driven, and the growth is fantastic growth is there in this sector. The size is also very good. So when you talk about the Horizon Pack, it has 6 plants across the country. And then the new project in the south, which has just started 2 years back, and the capacity utilization is something around 30–40%. So overall utilization, when you talk about the company right now, I think it is close to 60%. and there is a good avenue to increase the capacity utilization to close to 70%, 75%. And the security pack is doing well. So put together, these two companies of 832 crore turnover, certainly the higher capacity utilization in time to come should add volume by both these entities.
So at 60% utilization, 65% utilization, you're saying they're doing the revenues of close to around 741 crores. So we presume that at optimum utilization, they could do close to around 1250 odd crores as well. Two-part question, sir. The first one is...
Just one clarification on this. This industry, the capacity utilization will never be 100%.
Yes.
Okay.
Our study is that the optimum and the benchmark capacity utilization in this industry is somewhere around 75-80%.
So that means about 1,000 crores of revenues. When does that come by? And you spoke about the margins here, being lower than your overall margins. What are the synergies that you're factoring in? What do the margins at steady state optimum utilization look like?
See, in this industry, our study indicates that the range or the band is something around 6% to 14% sort of the EBITDA, because here the capex or the asset turnover is better. So we can't compare the EBITDA of paper industry vis-a-vis the corrugation industry. I would say that anywhere between 12 to 13% EBITDA would give a very good return on capital employed. So that is what I would aspire. And JK Paper is known for its the operational efficiency. So certainly when we come into this play, we will better manage these assets and do better than all other players. And also we will have a size and scale advantage once we are there.
So 12 to 13% should be the steady state margins you will be working with for both these two assets. That's HPPL and SPPL, right? That's and also, sir, just to clarify, 832 crores is what these entities did last year. You said 1,000 crores, that will be for Horizon. So both together, the revenue potential will be what? Around 1,150 crores?
Both together at an optimum capacity, Nigel, you are right. I mean, it should be somewhere around 1,100.
1,100 crores. All right. Just to clear out a couple of factors more, are you taking any debt from both these two companies? If you could give us a sense out there. I'm looking at it. Horizon had a debt of around 50 crores a couple of years back. Could you give us a couple of details over there?
See, right now, both these companies put together, they don't have a major debt.
Okay.
It would be something 60, 70 crores both put together. And as far as the JK Paper is concerned, we don't have to take any debt because we have adequate the cash surplus available with us. So this will be totally internal accrual funded acquisition.
So you said 60, 70 crores is the debt on both these companies, and you have, what is your gross debt right now?
See, right now our net debt is close to 2,200 crore, and by end of the year we should be less than 2,000 crore is our number.
And this balance 15% stake that you are going to buy in these companies over the next 3 years, just wanted to understand, what conditions have you laid down for this? Is it going to be similar valuations? What are the business performance metrics?
See, it is very simple. I would say that what we wanted the existing and erstwhile promoter is to add value in this business because they are the old veteran in this industry. And we wanted that we bring in our operational efficiencies and our management and the strength of the finances. At the same time, we wanted them to contribute from their business understanding. I mean, this is a kind of a partnership where both these entities should add value for the corrugation business, and the advantage 85% should flow to us and 15% should flow to them.
Okay.
So it's going to be a very good understanding.
Okay.
So just wanted to understand that, for the next 3 years, there would be a good partnership, etc. They will add value to you. But the remainder 15%, will you buy it at a substantially higher valuation? We're just, the street is worried about that payment coming 3 years from now.
No, it's not going to be a substantially different than what it is. I mean, we will buy it in 3 years' time. That is what our understanding is.
Okay, all right. Let's focus on the other part of business, Mr. Mehta. Your Gujarat unit is a packaging unit, right? And some reports were indicating that there's been some bit of a pullback out there in terms of capacity utilization levels. Tell us what's happening with your Gujarat unit. Have you all pulled back some capacity utilization levels? If yes, what kind of a volume hit can it be for Q3? Go ahead.
No, it's nothing. In fact, it's a misnomer and it's misunderstood from the market. In fact, the ramp up was pretty fast and it was a fantastic ramp up after the commissioning of this plant in January 22. And we have been operating at 96%. I mean, I could not imagine that a plant in just 4 or 5 months can operate at 95, 96% utilization. And right now also the plant is operating at 90% plus. So there's no reason for any kind of a volume downward thing or any capacity constraint or any other thing.
But
see, what happens
Mr. Mehta, you know, we get that point. You know, once the plant got commissioned, you ramped up very quickly, which is good on the management. The only point is we want to clear it for our viewers. Is this, have you pulled back? Are you functioning at a lower capacity utilization level currently at the Gujarat unit? And if yes, is it temporary? You know, is it par for the course and you're going to be ramping up in a short while? Please clarify on that.
No, there is no capacity reduction. This is what I'm clarifying. Right now also, I mean, as yesterday, the plant was operating at 95%.
Okay, so then that clears the air. So there's no pullback, there's no volume loss from the Gujarat unit.
Yes.
All right, Mr. Mehta, thank you so much for joining in and giving us the outlook on this acquisition in specific and some about the other businesses as well. We hope to speak to you about the other parts of the business soon too. With that, we'll step into a short break. On the other side, we have the Managing Director of TD Power Systems joining in to discuss their second quarter earnings. Welcome back. Let's get chatting with the management of TD Power Systems. Delivered a decent set in the second quarter. The revenues, well, they declined by about 6%. The generator manufacturers saw a healthy improvement in their margins, actually, and that percolated all the way to the profit. So to discuss the quarter gone by, but more importantly, the outlook for the business going ahead, we do have with us Nikhil Kumar, who's the Managing Director of the company. The stock doing well this morning. Nikhil, thank you so much for joining in. You know, the first couple of things we need to know about the remainder of this year. The first half of this year, you've got orders worth just about 400 odd crores. You said that this year you would look at around 750 crores in terms of order inflows. Do you maintain that? And secondly, the street is worried a little on margins. The first half, you've done around 12.5%, 13%. The second half, you said in the conference call will be better. But here, you had guided to us that you'd do about 15 to 16 odd percent. Would you hold on to that? Would you be able to do that?
Yeah, so first of all, the margins, the EBITDA margins, if you look at it with the other income, so other income also includes foreign exchange gains, which is an operational income. We did 15.89% in the first half of the year. So I'm pretty sure that we will keep that margin in the second half of the year, probably exceed that by a small amount. So we will probably cross 16% in the second half of the year. Overall, for the year, EBITDA margins, including foreign exchange gains, will be 16%, up 16% plus minus.
Right. Hi, Mr. Kumar. Good morning. Thanks so much for speaking to us. So you're saying that margins, as per your calculations, will improve by around 100 basis points, you know, because we don't include other income. But net margins will improve by 100 basis points in the second half of the year. Clear?
Yeah.
Okay.
Yeah.
Great.
If you take out, but foreign exchange gains should be taken as a part of operational income, because we take hedge on the euro and other currencies, and we have to classify that as other income.
Okay.
Although that's actually operational income.
Okay. And the order inflow query of 750 crores is what you're guiding for? You stick to that?
We are actually above the halfway mark in the first half. And Q3 also is extremely strong. We are seeing extremely strong order inflow this quarter. So I'm very confident that we will cross 750 crores for this year in order inflow.
And what
which
about
actually sets up the year for next year, because a lot of the orders that we're booking right now go into next year. So that sets up a good growth for next year.
right?
Sorry, I interrupted you.
No. Go ahead. Because we wanted to understand, because you have been winning orders, etc., and all of that sets you up for next year. What do you end this year with in terms of capacity utilization? Because at optimal utilization, you had earlier indicated that you could do revenues of over 1,200 odd crores. Does that happen next year, or will that happen the year after?
It will happen the year after. So this year will be, as guided, we'll be doing between 810 to 820 crores. That still stays. We are reconfirming this top line. And next year, we are saying we will do approximately minimum 20% growth. So that would take us close to 1,000 or past 1,000 crores. We have a capacity of 1,200 crores right now, but we're always trying to push that. So we may, we're investing and we're looking at ways to push it to 1,300, 1,400. So we are really looking at every possible way how to flog the assets before putting up a new plant. We have land, we can put up a new plant if we have to. We start probably planning something like that around next year, around this time, we start planning that.
All right. Mr. Kumar, 1,200 crores is the capacity. In FY24, you said you'll do around 1,000 crores, roughly. But you said to go from, that 1,200 crore capacity to around 1,300, 1,350 crores, you'll be putting in some capex. Quantify it. How much do you need to invest to get this additional 150 crores?
So it's mainly going to be in automation. So we're not going to be adding bulk capacity. We're thinking all of it is going to be debottlenecking the factory, automating certain parts of the factory, improving productivity. So it's not going to be a single investment. For the past 3 years, we've been investing around 20, 25 crores per year in such kind of things. We're going to continue to invest that kind of money. So over a 5-year period, it's going to be something like 100 crores or 125 crores. And we're doing this at, as I said, 20, 25 crores per year, which is equal to our depreciation.
Right. And, the 3 big verticals you said could be the drivers for the next couple of years. The first one was railways. You have about orders of 900 crores on hand. Just wanted to understand, going forward, how much can that be as a part of your business? The second one was services, which you believe would be a good revenue driver going forward as well. And the third one was distillery. On each of these, can you give us a sense how big these can be over the next couple of years?
So railways is going to be a big part of our business. Of course, it's subject to us also winning some of the new tenders that are out in the market. So our customer, the guy who builds the locomotive, he has to win the order. So there's a 9,000 horsepower project which is out, and there's a 12,000 horsepower project which is out in the market. The first bid should be open sometime this year, and the second bid should be open sometime early next year. So about the next 6 months, we will come to know who's won, and if our partner customer wins, then we also most probably will be able to get the business for the traction motors. So each of these projects is equal to what we're doing right now. So potentially there's a scope for us to triple it. We hope that they will win at least one, so at least we're going to double it. In addition to that, there's the Indian Railways business, which is the direct business. That's about 1,000 crore business per year. We hope to get around 10% of that. So I'm not quantifying the numbers because I just want to wait until the tenders are open and we see who wins, and then we also need to negotiate and win from our side. But the potential is 500 crores per year for us, potentially, if we win every single thing. Of course, it's not going to be the case if we win everything, but it's quite exciting right now.
Okay, all right, Mr. Kumar, thanks so much for stopping by. Wishing you all the best. Things appear to be on the upward trajectory, but we look forward to chatting up with you in the next quarter and get further details. For the time being, well, the stock is flying away. But we need to cut across to RBI Deputy Governor Michael Patra. He's speaking at the 9th SBI Banking and Economics Conclave.
Expressing equations and statistical models that are used to do these predictions. And analysts try to use these equations to predict the behavior of monetary policy makers from these data regularities. In fact, the monetary policy reaction function, which is an equation which helps you predict the change in the policy rate should inflation deviate from the target or if growth deviates from the trend. That has become a cottage industry today. But what is forgotten is that these regularities are based on past behavior. And in that sense, they only provide an ex post sense of whether or why policymakers deviated from some rule or they did not. They are not ex ante predictions of the policy decision. Because at the core of the decision is high uncertainty, as I explained. And therefore, in that decision, intelligent and well-informed judgment is called for. And a famous economist who won a Nobel Prize, Robert Solow, called it the smell test. You should know how to sniff well. Monetary policy makers have to rely on forecasts. In fact, the term inflation targeting is typically called inflation forecast targeting, because the forecast congeals all the information that you know today and can predict with some degree of certainty. So as regards forecasts, monetary policy makers, it is said, were created to make weather forecasters look good, to draw an analogy on economists. In fact, it is said that monetary policy makers do have a sense of humor because they put a decimal point to their forecast. You ask a monetary policy maker, what will inflation be? 15 months from today, he'll say 5.3%. I mean, that's his way of getting back at you. Yet monetary policy makers are, after all, human beings, and humans bring with them humor in whatever they do. They laugh at each other, they laugh at themselves. And one reason cited for this, which I will deal with presently, is that they are actually engaging in stress busting.
Welcome back. It is a century for the Nifty. At the highs of the morning, we have the Nifty in 3 digits right now in terms of gains, 18,370. It's primarily because it's running on both legs now. The Nifty Bank, which has been doing most of the heavy lifting for the last few trading sessions, is continuing to do well. It's up almost 0.6% at the high point. And the other index, which is at the high point, is the IT index. So both of them put together are taking the Nifty higher. It will be extremely interesting to see what we do in the second half. As far as the IT stocks are concerned, we have the usual suspects, Infosys, TCS, both of them doing well. The mid-cap IT stocks doing well as well. And now it's important to see whether Reliance puts his hand up as well, because Reliance is absolutely flat right now. If that big boy starts to move, then we could see further up moves coming by too. Before we take your leave on this edition of Chartbusters, just keep an eye out on Apollo Hospitals as well. A big mover in the last couple of trading sessions, up 9% for this week. With that, we wrap up from Nigel, me, the entire team. Thank you for watching.